Guys, welcome back to the channel. In today's video, I'm gonna go over the trades that we took and what you could have taken today and how you could have, navigated the market. So this is what we looked like today. Yesterday I wasn't able to get a video up. Got home late and just wasn't able to get one out. But yesterday was a crazy day because this 30-minute chart ended up crossing again, which flipped us bearish. And the reason why this ended up crossing in the first place was because of the higher time frames. If you look at the higher time frames, look at this. The 1 hour held the 50, the 2 hour held the 50 perfectly, and then the 4 hour 50 SMA was there as well, and that ended up crossing and giving us a big move down. So the system just keeps us on the right side of the market day in, day out. We're not blindly buying dips, and we know what to expect once this 30-minute chart crosses. So yesterday, once this 30-minute chart crossed, I mean, we were bound to go lower. I was able to catch some of this move down because I had options, and yeah, I mean, we got a good move there. I'm pretty sure was there a put cross yesterday, probably at some point, that gave a ton of points. But today, this is what we looked like. Same scenario. I mean, today we're bearish, and if we go to the 0-day charts here, let's start off on the put side because I did take a break-even trade on this chart. So right off of open, I actually did short this at open. If you look back in here, right at 9:30, we end up closing above this 10 SMA, and I entered on this candle right here, and I just rode this 10 SMA up. I didn't call this in the Discord just because, again, it's like right off of open, it's higher risk. I went lighter size on it too. It wasn't like a crazy size position because, one, it's right off open, and two, the volatility has been crazy. So, I'm not trying to size super heavy. I'm just pretty much holding for more points. And yeah, we got a very nice move out of here, and we ended up hitting the overbought zone. So, if you go to the 30-minute here, you can see that ended up playing out perfectly. So our zone, I forget the exact levels. I didn't chart them. I think it was between 6 and like 5 something was an overbought zone. And again, this is like more complex of the system. This is the second day of trend. And also we've been trending for a while, not just, once that 30-minute chart crossed, but we've been trending quite a bit. And we hit overbought again today. Again, only time you're not on the 5-minute on the 0-day chart. You find where the 50 is, and you add 3.5, add 4.5 to get the two levels, because the premium where the 50 is over $1. So if that premium was less than $1, you'd multiply by 4 and 5, but since it's over $1, you add 3.5, add 4.5, and at the time the 50 was somewhere down in this area, we ended up hitting the overbought zone, and we ended up rejecting it perfectly. And that's kind of why this system is so good, because you could gauge how far the trend goes. Like once we cross on the 30-minute on the Friday contracts, you could kind of gauge how far we're going to go. And today was that day where you could have expected a pump. So easiest way in my opinion to play the overbought zone is buy options, buy like further out options, maybe like a week out, to give yourself some time, and buy more like in the money ones just in case it does pump a little bit more. But I feel like in the money options for the overbought zone or overbought trade is the best way to go. Futures could definitely be hard because there could be drawdown on it, especially on a day like today. I was able to catch the overbought trade today on NQ, but I kind of got lucky in a sense. There wasn't much drawdown from when I entered, so I was able to catch, I don't even know how many points, I think over 100 points on the overbought trade before I closed it. And then we ended up getting actually, before we even do that, I played this 50 dip right here. I got in literally right at the 50. I gave this to Discord, and it was a break-even trade. I was keeping this trade super tight just because I knew we were overbought, and it may, it's less likely to hold, but since we are bearish, I'm still taking the chance because this is a trade that you want to take. And I was up like 30 to 40 points at one point, but obviously with like the volatility, I'm not selling for that little of points. I mean, the move like 30-40 points is nothing. I'd be looking for closer to 100 points before I even start trimming because of the volatility. So that was a break-even trade. I didn't hold it all the way until it broke. I just pretty much had my stop break even once we started to go lower, because I knew if it didn't pretty much go lower from there, it was gonna break below the 50, and that's what happened. We ended up getting below the 50, cross negative, and this is not a trade you take. This negative for us right here is not a trade you take. Market is still bearish, so what you look for is on the call side. If you go to the calls real quick, 5-minute time frame, you could have played this reject right here on the 5-minute. This one was a little bit harder to catch. Again, you may have stopped out on this because of the volatility, but we popped up into this 50 here, and on this next candle open, it did look pretty good to short because we ended up getting back below the 50 SMA, and it gave some points, but it did, once it closed below, it really didn't give more points after it broke below the 10. So I was also in this from this like this 115 candle, because initially I wasn't gonna play it, but then once I saw this candle open, it looked pretty good, so I got in, and it gave some points down here, and then I stopped break even once this chart looked really funky. And then you could see what happened here. The 0 DT chart crossed. And this is one of those scenarios where you could take the cross. You know, the system's very situational because there's some trades that go against, you know, like certain rules. You just have to know how to navigate it, because if you go to the 30-minute here on the puts, you could see that this is there's a massive gap between where price was. Price was all the way up in this area before we crossed, and then the 50 is all the way down here. So since there's a large gap, you could play this cross on the 0-day chart, even though the market's bearish. So if you look here, 5-minute time frame, wrong chart. If you look on the call side, this gave a good move. So again, 10 went above the 50 star curling somewhere. I remember saying this exactly. The 50 star curling around like 130 to 140 on the contract. So if you got in, this gave a nice pump. You probably would have caught in like 100 points about, because I'm pretty sure this went like 90 to 100 some points. So it gave a good move on this initial pump. And then if you, I mean, there, you know, I would have closed this once it broke below the 10. I was already all out by the time we got this move higher up here, but you know, it did close below the 10 there, and then we got back above. So maybe, you know, you could have re-entered right on this, but I was already done with the cross at this point, because, you know, gave a good move. Market's still bearish, and yeah, I mean, I took my points and ran with that. But you know, that's one of those scenarios where you could take that 0-day cross, and you know, it played out good. So those are trades you could have taken. And then of course we got one more trade right down in here, 30-minute time frame. I mean, look at this. The 50 SMA here on the 30-minute marked the exact top of the market. You know, if you guys know, the 30-minute 50 is a major pivot in the market, whether when we're above it or below it. It's a major pivot, and you could see exactly what happened once we hit that pivot later in the day. The market ended up dropping like, I think, 300 points from that 50. So if you shorted this, you got paid massively. I wasn't on the chart at the time to take this, and also I was pretty much done for the day at that point, because I took a lot of trades, made a lot of points. You know, there's no point to stick around. But you know, this was a trade you could have taken. If you shorted here, you got paid. Stop loss if we lose the 50, and you know, we got a massive rip. So you know, with that being said, those are the trades you could have taken going into tomorrow. Again, market is still bearish. Why? Because this 10's above the 50 still curling up. We got to see how we open tomorrow. Big gap up and we cross negative, market could go neutral. If we don't get a decent gap up, you know, market could remain bearish, and we're just gonna be looking for a short trade. So you know, 0DT cross on puts, 50 dip on puts. If you know, we go neutral tomorrow, at some point we probably will get a heavy bounce. But I mean, the trend has been so strong recently, and we just been holding this 30-minute 50 so long, so who knows, that may mean we're going to head lower, and you know, it doesn't really matter what way we're going to go, we're going to be able to catch it, because you know, that's just how the system is designed, and you know, that's why it's so good. You know, it doesn't matter what way we go, there's no bias. You just look at the charts and you just take trades based on the higher time frames. You know what to take on the 0 days because of like the Friday contracts. So you know, you just got to know every aspect of the system and how to, you know, navigate each market. But that's pretty much all you got. If you guys enjoyed, drop a sub. If you guys want to learn, join the Discord down below. But I'm out. Peace.